All right, hello everyone. So we're going to go over the ES and crude, and specifically we're going to answer a particular question, and that is, was the move today in the ES forecastable or predictable? Could you predict the move that occurred today, the up move? We're going to answer that question. All right. So for those who don't know, the move today, what I'm talking about is this move right here. See this low to high? That move, this move. Okay. So how I'm going to do this is I'm going to show you the process, and that process will identify areas where we will look for buying or selling to predict the upcoming move. All right. And we're going to take this step by step so anybody can follow along. All right. The first thing is, let me show you the wrong way. All right. The wrong way is to simply look at the hourly trend and have no idea what's going on, or simply looking at one time frame and have no idea what's going on and just relying on it, and specifically just relying on candles. For example, let's say this move didn't occur. Let's say if I just saw this hourly, this is hourly, I would see that there's a breakdown, test, breakdown, retest, breakdown with ease of movement to the downside. Looks very, very bearish. I see this pullback, retest at this area, looks very, very bearish, right? It looks bearish. Why? The market broke. Right here we have lower highs and lower lows, and you have a clear breakdown. And then the wrong thing to do would be to just take a look at this and think of this as an ABC correction and just short. That would be incorrect. All right. So relying simply on one time frame, relying only on candles, relying only on what it looks like without a volume at price chart, in my opinion, would be putting the trader at a disadvantage. Why? Because you don't know where the trend is in the position of a higher time frame, meaning this trend could be part of the trend or it could be part of a pullback, which is what it was. It was a pullback and not really part of the higher time frame trend. It was part of its pullback, and that's critical information, especially if you know the higher time frame guys are looking to buy pullbacks. The second thing is having no price at volume information. You cannot see or quantify prior areas of heavy volume buying, and therefore cannot identify where the smart money bought and what levels that smart money or the guys that are short are looking to get out of their losing position at a break even. All right, so with that in the background, let's take a look. So the first thing is we'll take a look at the daily, and we notice it's in an uptrend. So I'm going to start writing these steps down. So, take notes. All right. So step one, daily trend. All right. So we noticed that the daily trend. Now, why is the trend important? Again, folks don't understand it. The trend is like a weighted coin. What that means is up is stronger than down, or heavier than down, just like a heads is heavier than tails. So trend is like a weighted coin indicating a bias towards one side of a binary of outcomes, up or down. Up is weighted, has a bias, just like heads has a bias on a weighted coin. All right, so daily trend 1. What's going on? I don't know what's going on. Anyway, there it now works. All right, so we have that daily trend. All right. Now the trend consists of waves. We need to know where the pullback areas are, where there's heavy buying. Why? Because price is going to go to those areas. All right. So the next step here is to take a look at any volume at price chart. Any volume at price chart. And what I see here is at this, I have a highlighted box. It's 1.9 million contracts right here. So these are buyers. And price went up, they sold some, now it's coming back down to that same area. And the question is, are these guys going to get active again? Are the sellers who sold going to break even and buy the cover? All of which will create buying pressure for a move higher. So we'll put step 2. As prior areas of heavy buying and selling, which is basically heavy buying and selling volume. All right. This is just like saying support and resistance, but it's based off of volume, and typically those support and resistance levels are, whether they're price or volume, they're almost the same, right? Because they're just the same, right? So it's just volume and price and support and resistance, right? So here we see that 1.9 million. Now what we want to do is profile it. Now if you profile something, it might go give you this, it might give you that, but this chart will help you identify specifically the level. Because right now when I profiled it, it gave me a price that's all the way up here. But I know that that's not the pullback level. I know that the pullback level is within that white box. You know, it's not up there. So that's how I'm using this to help refine that. And now I have that level. So this is 48.80. You had 1.9 million contracts traded there. All right. And what is the level? What the hell? It's the exact level is like 48.79. You know, that's like the exact price level. This chart helps you refine that level. First, you find the box, the high volume area, the high volume box, then find the level within the box. All right? So, step 3. It's just you get a POC high volume level in the box. All right. Now, why is that important? Because price is going to come down to that area and we want to see if they're going to defend. because this is the composite man's footprint. This is where this guy bought a whole lot of inventory or whatever. And where is that on the bar chart is in this area right here. This is reaccumulation right there. How do you know? Because last time I did that, look at that, the the move after it. They bought everything and then boom, it went up. So now it's just coming back to that area, all right? So now we have that. Okay. So we have that higher time frame is done now, all right? Why? That's the level we're looking at for a test. Now, if you're just using price-based levels, they're almost the same. Not exactly here, but what you'd probably do is you probably draw it across that side. This is a price-based level, right? Because it's a high and all that, right? So the volume-based level would be up here, which I'm showing you how to do, and price-based would probably be here. Okay. All right. So that you already know. So I'm showing you what you may or may not know, which is that. Okay. So we have our steps, right? The trend, prior areas of high volume buying, and then refining it. All right, refine the high volume, whatever the level in the box. Without this box, I would be blind. It could be up here. If I didn't go that high, it could be down here at the, what is it called? The order block, right? But look, there's no volume in the order block. So it's not even an order block. Do you see any high volume print here? No. So if you just think this is an order block or a demand zone, it is backed by nothing. Yes, there's a whole lot, a price level, volume, a line of support. But to say there's heavy buying there in a block is not there. It's up here. So this is why this chart is needed. This is the volume at price chart. And then we refine the level in the volume at price level. Okay? All right, now you got that. Now we go to a lower time frame. And we notice that the market is going down. Right here in the hourly chart is going down, right? See, going down, down. All right. As it's going down, it's coming down to this level. If you don't know what you're doing, what you will do is, let's say you don't have any of this information up here that I'm showing you. What you're going to do here is say, oh, this is the downtrend and this is an upthrust. Because you'll see that this broke this level, right? With these big bars, they broke this level. And this is a pullback 1, pullback 2. And this looks like an ABC correction and possible upthrust. And you might sell this, or you might sell it at the average, right? And sell. And you'll be on the wrong side of the trade. So this is what not to do, is just to look at here and look at the candle bars and think, oh, this is a pattern, and based on the pattern and the trend, take the short without considering the higher time frame trend, higher time frame level, higher time frame where the buyers of the CM is. Without considering all of that and just looking at this, it will look very bearish up to this point of that ABC correction. That's your error, right? So what you want to do instead is, once you have this, Right, this line, this level is marked right here. So we see it clearly, it's over here. What happens? The hourly pulls back to that level. Okay, so we marked the level, we marked it within the high volume box, price goes to it. All right. So be patient for price to go to level. All right. The level. Now what do? You got step 1, step 2, step 3. Now we want to see if the buyers are going to buy. Okay. Step 4. Determine if the buyers are buying. How do we do that? Price goes to that level, and look at what we got here. As price goes to that level, what is this? 210,000 contracts bought at that low. As that happens, does price go lower or does it go higher? Price goes higher because it is buying. So as price went to the level, you have buyers come in, buying 210,000, buying whatever they could up here, taking price up, meaning this is demand. And here, another 280,000. So they're buying within this area. That's what's going on. And when they're done buying, which is what? Reaccumulation, price goes up. Okay. Now we'll just repeat everything. So first daily trend, then prior areas of high volume buying and selling volume, then I forgot one of the steps. So daily trend, prior areas of high or heavy volume or selling volume in the rally. And then get okay. All right. So first it's the daily trend, then prior areas of high buying and buying, basically high volume within the rally, right here. Okay, prior areas of high volume in the rally using a volume at price chart. Any volume at price chart. Okay. So we got the daily trend, prior areas of heavy volume in the rally using this chart, and you see here this is where it's at. Then get the POC within there, so you get the exact level. That's why we're doing it, because we want the exact level. And then be patient for price to come back down to it. When it comes back down to it on the lower time frames, look for buyers to start buying. And here you see them buying the 210,000, 280,000. These are big prints. It's not a small shitty print. These are big prints, buying everything and then running it up. And that's how you got this move. All right? And now you're probably wondering, okay, can you do the same with the hourly and you know, same thing that I did right here with the daily? Can I do it with the hourly? Absolutely yes. Absolutely yes. You can do exactly that thing. All right, so I'm going to show how this was done on crude for the trade today. All right, so take a good look at this shit. All right, now I'm no genius. All right, hold on. All right, now here we have a situation on crude oil. You have a breakout, right? I'm going to apply the same logic, this real time, all that. All right, so here I see crude oil. And I see, actually I need a little bit more data. All right, so here we have crude oil. I'm looking here. I see there's high volume prints right here, right? This buying against this level did all of this. So this is 18 plus 22. It's a lot of volume. In terms of the column, this is the most amount of volume. So it's back here. So I'm thinking that this is a nice area because what the hell is going on? 1 second. So I want to see how it's going to behave when it taps this area. Because why? I mean, this is where it's going to pull back to. And in fact, that's where it's pulling back right now. Right? So now we have a daily trend. This broke these two highs, had a breakout right here. And now you're in a pullback position on crude, right? So you have crude, it's in a pullback position. It's right in that area testing the breakout. I'm very interested in buying, but I need to, you know, make sure I know what I'm doing. So I see over here that, over here, excuse me, they have a lot of volume. So smart money was buying here. It was also buying this entire damn level. Look at this. There were 22, 20, all of that, and then picked it up here. So we want to get the exact level within these two boxes. There was heavy buying at these boxes. This is the biggest green bar in 16 green bars. It looks good. So, and that doesn't mean it's going to work. You have to see what happens at that area. So we're going to profile it. And now we have that area. It's testing that area right into that area right now. It's right there right now. Right there right now. I am now going to be looking for buying. Buying. All right? If the trend changes and breaks through, I'll look for shorts. All right? So you see the hourly trend. See it's going down to that level. You see that area. Now let's go here. Here's what I see right now. Okay, look at that. Look at. Someone, I'm not sure if they're buying that low yet, right? Because I need to see some green bars indicating, this is buying pressure. But someone here, they may have gone, this may be a break of this level, but the other side is buying, right? So there's activity here. This is 27 times 1,000, 27,000 contracts here. That's the most amount of buying, the most amount of trade since the distributive action up here, where you have 26,000. This print is quite high. The only print that's higher than this is all the way up here, 36. So something's going on here. Now, I don't know what's going on yet, but I'm showing you the process. You got buyers. You have a daily trend. You have your pullback to that area, which I showed you, like on this chart, buying, profile the exact level of interest. And this is not based on fucking make-believe. It's based on markets volume information. I'm not like, interpreting this is wave 3 or wave 5 with the ABC. No, this is based on the market. This is all factual information, right? If I was to say this is the biggest volume there is, then I'd be correct, right? There's no, that's what I'm trying to say. There's minimize the interpretation and focus more on the objectivity. All right. So objectively speaking, in this is the level. We just went to that level, slightly below it, hugging the 20 and the 50 MAs, which is always good because a lot of big traders, especially on daily charts, they actually use these these MAs. Not that much on the intraday, but on the daily, they religiously use these levels, these MAs. And we're right there, right at that level, at that block. And at that block, as this price moves down, we're seeing high volume, but I cannot confirm whether it's buying yet. Not yet. I'm looking here, and I'm looking on the 5-minute chart. Oh, shit. This pullback may have actually be buying pullback. This may not be a pullback. This may have just gone to that level, and this could be just buying. It's not just like a bear pullback. It could actually be a buying wave. I'm not sure if it's a change of behavior yet, but this is actually quite large. And I don't want to go like multiple levels deeper and start doing all that stuff, but this is see 69,000 drop, 59,000 on that up wave, and it sprung it. Lack of follow through to the downside. Other markets didn't even break that low, made a higher low. So this might be it. It's actually holding. You see this area right here? As it went and took this low, look at all the volume that came in, and then went up, it tested, and it's bouncing off of there. So this looks this looks promising, but I'm going to wait for even more confirmation and then take it based on my judgment at a later time. All right, so this is how you do it. Okay, now if I was using lower time frames, I would do the same thing that I'm showing you here, But instead of starting at the daily, I'll just start at the hourly and then go to a lower time frame, like I don't know, like 5 minute or whatever. So it's just this how it's done. And this now I'm gonna link it to Wyckoff. All right. So this is what he used to do back in his day. All right. Does it look familiar to what I'm showing you? Where you see volume at price and those prints. Of course it does. So the idea is, you have your wave chart and your bar chart, but you add volume to it in this way where, you have volume at price. It's the same thing. Even the volume across a level, he has that, meaning across support and resistance levels, like not only the big prints, but, summed up across the entire row. He did that as well. Somewhere in this studies there. Okay, so he has these studies. You can go review them. The difference today is instead of using very small increments, you would have to use larger increments. Instead of using one tick, you might use 1 point or 2 point or 3 point, or for larger box sizes, 10 points, 5 points, right? And then try to interpret what's going on and the behaviors, trying to see what they mean. All right, that's all, folks. Take care. Thank you. Bye.